Hi everyone, thank you Kevin for the nice introductions. We are going to do a quick sound test. Can you guys hear me? Okay, thanks John, Eric, Julia. Okay, wonderful, awesome. So again, my name is Mark Nicolas. I'm the founder of the Day Trading Zones. I've been a trader for almost 21 years. I started in the prop shop professional environment. I worked for a small hedge fund called JP Capital um, in Fort Lauderdale. The Day Trading Zones is a research and analysis firm on creating buy zones, caution zones, and sell zones for the morning for institutions and the retail side of our software. And what we do is we focus mainly on options and futures. Those are, I've traded pretty much everything in my life, stocks, futures, and Forex. And these have been the instruments, as you've seen, that offers the most interesting flexibility to achieve consistency and wealth, and also be able to defend bad trades like the awesome stuff that you've listened prior this morning from Ron and Peter. So now what I'll be going over is some very actionable uh, uh, items and stuff that I've learned for the past 20 years about how to master support and resistance. The interesting thing is that 90% of the traders lose money in the directional bias. If you don't do credit spreads like we've seen with 68% to 95% chance of success, most of the traders fail in trading because they have a hard time understanding where to put their trades, where to enter trades, exit trades, how to master support and resistance, what are the biggest and costliest mistakes that traders do when they trade support and resistance. Whether you trade futures, options, or Forex today, you'll get a lot of tidbits that you can apply in a very efficient way coming into Monday. So the premise is this. Okay, before we go to charts, and I'll show you also some broker accounts and we'll take some real example. The premise is we as traders have two choices. Either we are going to trade, so this is a bell curve, but don't be afraid. I just want the principle to really sink and help you think differently about your trading is we as traders can trade the current price, which in the bell curve is that $100, or we can wait patiently to trade at area where we have a high probability of success. And there's two ways of doing this. Some traders in the options market could use the one standard deviation, which is a 68% chance of success, a 1.5 standard deviation, which is an 84% chance of success, and they wait for those areas to happen in order to trigger and some trades, because the entire business that we do have as trader is where are we going to do business where we have a higher chance than a 50-50. See, the problem with traders that spends their all day staring at the screen is they click and in and out of trades with a 50-50% chance without an edge of 68, 84, or 95% chance of success. That's to the standard deviation. The problem is that the standard deviations are a lot of times misleading, and they destroy traders, especially during earnings when you have a gap of 100 points like Apple. Apple was about 550 before the last earning announcement. They announced earning, and the last day they were picking at 500. So all those traders that were depending on a one standard deviation, a two standard deviation, and they would have looked at their trade at 530, 520, and they had an over 85% chance of staying above 530, 520, got destroyed. So during high volatility and earnings, the standard deviations are not the best. What I like to do is overlay, for the past 20 years, your price action, which would be like your monthly charts and your weekly charts, which I call that main trend. So your main trend is your weeklies and your monthly charts. Whatever instruments you look, and you wait patiently for those retests to happen. So if your overall trend is up, you want to wait for a retest of your main trend on your monthlies and weeklies. And the same here. If you want to short here, you wait for a monthly or weekly resistance if the overall trend is short, and you wait for those resistance to happen. So when you combine price action, where market maker, professionals, institutions have been defending area, those are support and resistance. Those are what we call cluster. 2 points of defense from an institution, because usually the people who are going on a weekly and the monthly defend areas are not the retail traders, they are the institutions. And you have to understand what trade setup, there's 3 trade setup that is very efficient that I use to get those area, and also the mistakes that we have seen of people trading support and resistance, because everybody trades support and resistance. For instance, if we go to a real trade, real money here that I have here, this is a credit spread. We talked about credit spread with Peter on being a high probability trade. This is a credit spread that I did for $4 right there. This is my trade price. It's one contract. And the current price on PCLN is 1,190, and you see that because I had good support and resistance, I was able to go way out of the money a week and a half ago at 1340, 1355. We'll go back in charts, sell that for $4 and it's 95 cents. So essentially we made $300 into a $1,500 capital. So 1,500 capital of margin capital block, and a $300 return, which is a 20% return in less than 2 weeks. Okay, so 20% return in less than 2 weeks, just FYI, a lot of hedge funds would kill to have those type of returns. And notice how far I am from the current price. So again, like Peter said, those credit spreads are awesome strategies to build a retirement nest egg. And so this is the day trading zones trade navigator where we construct buy zones. So on the, let me show you on the SPY and the ESC, you have all of those there. So what we do is, if I zoom, is that we have extreme buy zone, the green zones, where we look to short the market, we look for a trade setup and a shift of momentum like a cross, recross, or a retest. That's a real chart, that's not a PowerPoint. And usually on the retest, that lower high, which is a number 3 setup for us, and that cross, recross is a number 2, we love to short the market. So I always look for that trade setup, cross, recross, retest, lower high for a short at the extreme of the buy zone of the day trading zones, which we spend about 2 hours a day to put together, and I'll show you from the full Pro Tool with the trend. You got to know your trend. You need to understand between the support and resistance here. Do I have an over 50% chance of this going from the support to the resistance, or from the resistance to the support? And within a range, let's say it's a 9-point range, and you have a trick, like I'm giving you a trick where you divide those range by 3, so 3 points, 3 points, 3 points. If your main trend is down on your monthlies and weekly, and you start shorting on the first third, so you divide your ranges by third, 1/3, 2/3, 3/3, okay? If you start shorting on the first third, then you have a 66% chance of success. Now that you understand that, and everybody in this room have some type of a support and resistance, now it's easy because you divide your range by third. That's a little trick I learned in professional trading. You divide your range by third, and you make sure that you trade within the main trend within the first third, but you need a trade setup. I have 3 trade setup. I'm going to show you charts like that cross, recross, shift of momentum, or retest lower high. And I'll show you also the one of the difficult one, which is the cluster high, cluster low, the ping pong. Okay, so this you can apply Monday and help you in your trading. So when you have a spread like this that makes you 20% so far out, it means you have good support and resistance. And it's not necessarily the standard deviation that you are looking at, because look at the charts, the daily charts of the full Pro Tool of the day trading zone. So let me explain a little bit of what you are looking at right now, which are really the ingredients that you need when you want to trade support and resistance correctly. You want to know what is the immediate trend, which here on the full Pro Tool of the day trading zones is indicated by an up arrow or a down arrow on that daily. Blue dot is a 60% chance of a continuation of an uptrend. You see, they went from 1100 to 1360, so that was good for 260 points here. Boom, plus 260 points. And then you look for a shift of momentum on the important zones, which for us are the dashes. So that's that cross recross that I was talking about, which is trade setup number 2, and that retest. On that retest, 1, 2, 3, 4, 5, 6 days ago, 7 days ago, I did that credit spread with about 33 days to go. Okay, and the tape was at about 1300, 1310, I believe. you know, see 1316 on that retest, and when you have the proper support and resistance, then you can go out of the money. And I took the strike 1340, 1355. So this is how you are not gambling now. Now you have a business. Now you have a business because not only have a cross retest lower high, I know it's going down, but guess what? The problem that day when it retests right there and it comes back up retesting, you look at your option stats, and your option stats would tell you that there is a 100% chance of staying above the 1250, or there's a 85% or 68% chance of staying above the 1280. This on the day trading zones, and even with simple MACDs, the 12.26.9, which is the slow MACD, I like to have synergy between the two MACDs, and the 6.19.9, you had the thing that was showing you it was game over already. Because you see, as they were making new highs here, this was making lower high already. So I had the cross, recross, retest lower high, and those trade setup can help you in your own trading. Whatever support and resistance you use, this trade setup can help you. So the cool thing is this time, sometimes that cross recross could be a double top. It could be a head and shoulder. But the key is to remember that you were above the price where they took stops, and you recross the important zone that everybody is looking on their monthlies and weeklies. And now the momentum is in your favor. It's like physics, really. And now you have the retest, and you look at the retest and it's lower high, and now you have your trade set up. So those help me again and again. This is real money right there. This is not just a PowerPoint example. Before I go into the education part, the trading part, I want to show you that those ideas work. And necessarily when you look at your charts and you look at your delta or your standard deviation, they are not always accurate for the reasons I mentioned, for all earnings and volatility. You need to combine both really to have the maximum chances of success. And support and resistance is everything. Every trader in the world, institutions, trade support and resistance. So let's go one more time. So what I'm going to show you is a couple of cool tricks with the options. Today I'm going to show you how to improve your credit spread entry and with those trade setups, and what you have to look at on your charts, your support and resistance, the concept of the main trend. Again, the main trend concept is as follows. If you look at your charts, and I don't know if you look at moving averages and you look at Kellner bands and you look at volume profile, if your overall trend is higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, then all pullbacks here to your weeklies and monthly support, weekly, monthly plus weekly, equal the main trend. So you always want to trade within the main trend, because it's so difficult in trading to make money to start with. So if you fight the main trend all the time on your weeklies and monthlies, well, you're always going to fight that. What you have to look for those pullback is you look at a 60-minute chart, which I call the intermediary trend, and plus the daily chart to pull back. They pull back to your weeklies and monthly support, and that's where you get back if the overall is trend, and vice versa if the overall trend is short. Okay. Now, in addition to that, you have support and resistance and cluster high and cluster low. Okay, again, if you look at the chart, cluster high, cluster low, if I look at this chart on PCLN, they are nothing more than area where institution comes and defend. So like here on 1373, I'm going to put a parallel line so that you understand. There was 3-4 touches here, right there. Okay, so on the 1370 price line, and what you understand is that institutions are selling. They are net seller. So there's a net seller here. There's a net seller here. They double top this thing, net seller. So that becomes a cluster high. That cluster high fell, recross the day trading zones, retest lower high, retest another lower high, and boom, it's game over. So those patterns, they help you again and again, not only to place your credit spread out of the money, because the day trading zones, when it retested at 1320, I went at 1350, and boom, and look what happened. Next, this thing went all the way to 1158. So this thing proceeded to drop about 200 points. And those are the type of things that only price weekly, monthly Daily 60-minute charts helps you to anticipate. So a lot of time people ask me, how did you do those doubles or triples? Because I anticipate, I see the trade setup. So here are the 3 trade setup. And after that, I'll show you a cool things if you're interested. Who is interested in the room to learn about how you can control about 1 ES for about $500, 2 ES for about $1,000 to $1,500 with the SPY weekly options. Control the same with the same risk, about $100 for one contract, okay, on both, and have a rate of return that is 40 to 400 times superior to the years. John says me. John, Thomas. So I'll go over that after I go through the trade setup. And then what we'll go is we'll go through the real charts here, Trade Navigator here. And I want to show you the Trade Navigator and show you those trade setup, how they happen again and again and again. And again, this will help you on Monday, you know, to think about segregation of account, trading out of the money time decay for weekly and monthly income, on your credit spread, on your naked puts, on your double diagonals or calendar, but structure them the right way with the right vision of where your weekly and monthly are going. So here's the trade setup that I use all the time, and I think they'll help you regardless of your support and resistance. Obviously, the day trading zones was a software that I did before we opened it to the retail public for institutions. I do consulting for institutions and prop shop. And basically what it is I trade real money, so every day, millions of dollars a year for the past 20 years. And I wanted to, instead of flipping charts of the monthly, the weekly, the dailies, and the 60s, and some others that I look with these niche charts, I've some stuff that work, like it could be a Kellner band on one chart, it could be a volume profile on another chart, and it could be an EMA or a moving average on another one, it could be whatever. So what we do, and I did, is I wanted to have 27 lines across those time frames to show on the 60-minute chart. Okay, I trade mainly from the 60-minute chart, and those zones that you'll see on our tools are the same. So I come in the morning, I look at the trend, because again, it's not enough to know a support and a resistance. You want to know the higher probability. With a probability over 50%, am I going from support to resistance going up, or am I going down? And make sure that we break down the statistics and the probability of success within the ranges. And so here's the big mistakes that traders do when they trade support and resistance. Number one, it's the first setup. People do that pretty well. They go from support to resistance. They see stuff going higher highs, higher lows on their bid, you know, their time and sell. But the crucial mistake number one that traders do is when the price reach the resistance here, they get out of their long, but they proceed to make crucial mistake number one of any traders is that they proceed to go short. So let's say this zone here was a 1,000 round number on the ES. The round number usually create a lot of fights, you know, and a lot of people would have looked and put their stop loss here at about the 1,000. What the market makers and the institution, everybody do is they can see the order book. They have a vision not only on with the level 2, level 3 of your order books, but they have something called the dark pool. You'll have to Google that, the dark pool. There's a good book on Amazon that you can look on the dark pool. And what it is the even orders that you don't even see from Goldman and Deutsche Bank, the big guys. So the big guys can see the order flow from the small guys, but you cannot see all the orders from the big guy, especially in the options market. And what happens is, what they do is they round the stop of the small guys here, push the ES from 1,000, let's say, to 1,012, and they'll reach what I call in physics a neutral point. So if you throw an object in the air or you kick a ball on the street like this, okay, and the man kick a ball, the ball goes up, 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 up. That's the force, the momentum of the ball going up. But the ball will have the friction of the flow and will slow down, slow down. At one point, the ball doesn't go up anymore. It's called the neutral point. The same as your tape. That's the best way that I have taught myself to be a tape reader. At the neutral point, essentially your tape or your price action is going the other way. So here I cross up, higher highs, higher bid, Neutral point, stops going higher, essentially cross and recross and hooks back. Now the momentum is in your favor versus the first one. So this number one is the same price than number two, but they are not created equal. One had the momentum going up, so you cross, recross, and you recross. That's a shift of momentum. The retest, and that's where you have a higher probability of success. That is really my best trade setup. I love this one. This cross, recross, and that retest right there. Could be a little higher, a little lower. Now, in top of that setup, what could happen is they add the chart formation to stop you. They might do a double top with a higher high on the second top. They might do a shoulder, head, shoulder. Usually those are the main ones from me, the double top and the head and shoulders, or the inverse head and shoulders and the double bottom. Okay, if done properly, you'll understand on double tops, you're looking for a second top higher. It cross and recross the previous top, and always look at the middle part of the double top and double bottom. A lot of traders, even traders that I know that have traded 10 years, don't even know that the middle of a double top or double bottom is key. It acts as a support and resistance itself, okay, for reject or continuation. Now, the last trade setup where most traders have a hard time to is called the ping pong cluster. Here you have a net buyer, and it's always about looking at your main trend. If I look at the day trading zones pro tool, and I look at the main trend, and I look at the weeklies and the monthly, and it shows me up at the resistance here. Let's say this is an intermediary, okay, resistance on the dailies at 60s. Huh? Okay, so what I'm going to do here is if this main trend overly is down and it's going and the daily at 60 is going to resistance here, I'm going to look for a short. So if I have a net buyer here and I have a net seller here and I have a net buyer here, 2 points will form a cluster, a channel. Okay, so write that down. And you always look to trade and place a trade on the third or fourth touch of the channel. That's key, guys. Third or fourth touch, write that down. Not the first or the second of your channel, but the third or the fourth. And the problem with traders on the second touch or the third touch, they are looking for a break. And they anticipate the break and they take the short here. But the problem, if you take the short here, you have 66 chance of losing. You have only one chance out of 3. See, because this is 1 out of 1, 2 out of 2, and now it's 3. So you have only one chance out of 3 that the short is going to work. And that's where most traders fail. They anticipate the short of the cluster, which is not how you want to do it. If your main trend is short, you wait for it to come back on the third or fourth touch on the top of the cluster, and you take 50% of your size short, okay, within the main trend, and you put your stop loss on the high candle of S1 or S2 of seller 1, seller 2. When it recrossed the day trading zones, important zones, I had another 50% of my size, and my average size is in between. Instead of being the sucker here that chase the break, and unfortunately the same guy that chased the break here is the same guy who gets stop here, 2 points on the ES, 2 points on the ES. When he gets finally the break here for 5 points with commission, he has watched the screen. You watch the screen all day long for nothing. You know, you're a break-even trader versus putting the statistics on your side where you short the top of the cluster on the third and fourth touch, add to your size when it recross your important support and resistance on our day trading zones, and then now you have an edge compared to the guy you chase here. Okay, you put statistics on your hand. So let's look at those trade setup on the charts, and you'll see how cool they are, and they happen again and again. So we have a service for the retail side, which is 9 markets. For options and futures traders. A lot of those futures pair, by the way, can be substituted for options. Like I trade a lot on the SPY because it's one of the most liquid instruments, but I look the ES, the NQ for support and resistance synergy to trade properly the SPY. Apple and Google, the crude, I might trade USO. We have also the ZB, we might do TLT, TBT. Okay, we have the Euro, you could do FXE, etc., etc. So we trade those markets which are the most liquid, and also again for the full pro tool, which I do a mentor traders 3 times a year only. It's not an open door. It's 3 times a year. I do an intensive training sessions 3 times a year. We provide a license of the full Pro Tool, which is a lifetime licenses to any instruments. It's not limited. It's all stocks, futures, ETF. So what you want to do here is recognize the trade setup that we've done for your own support and resistance and see if you see them with a cluster high, cluster low. See, like here, there was like if I put a parallel line, okay, on the day trading zones right there was a cluster high, cluster low. So if you have a day trading zones or one of your own support and resistance, so see cross recross, that's the number 2. That's my retest right on that zone right there, and that's the number 3. Look what it did on the SPY. By the way, this is not a screenshot. This is a real Ninja platform here. So on the retest at 188.83, I have confirmation to go short with the lower high from the extreme buy zones to the extreme sell zones all the way 88.63 all the way to 184. That's a 4-point move on the SPY. This is huge. If you buy an options with a 50 delta, a 50 delta option, okay, on the weekly, it's a 2-point move. 2-point move on the weekly options that you would have bought at the money around a buck and a half. This is a double your money. Those could be doubles and triples, and I will show you in an instance on the option charts how this is true. So this helps you to construct interesting trades. Look at other trades. Apple. Same idea here. Look from the left to the right. We had the cross for buying around 19, the retest at 24. We went all the way to the extreme buy zone. On the buy zone, they rejected. Cross retest. So you see, they always happen. So if you have good support and resistance to know those patterns, and you mix that with a double top, double bottom, or head and shoulders, will help you tremendously. Look at the ES. Same idea. Day trading zones cross 1882, retest cross there was the top, retest 1882 right there. That's my favorite one. Those are the best trade setup. Vroom, from 82 to 26. That was huge. Then 26 back up to 76, and then it's a retest lower high, fell again to the bottom of the caution zones. They went retested one more time, the bottom of the buy zone, and back to the caution zone. So those lower cross retest lower high, cross retest lower high, are extremely powerful. Now this helps you because they help you, like on Apple or Google, they help you construct spread. If you know when it comes at 19 that we're on the extreme sell zones, which is the moment when you're on the extreme sell zone, that's the time around here to look for buy. And when you are the extreme buy zone, you want to start selling. And that's the beauty. You have two choices. You can be directionals, buy calls or put. The problem with the Googles and the Apple, the bid and ask spread are for suckers. It's wide. And they'll take you, and I'll show you, like on the PCLN, why it's better to sell time decay. Or two, here you can sell out of the money. So you know it's 19. You could sell a 510, 505. Put spread, credit spread, or naked puts, or whatever that has time decay working on your favor on the rebound and creating a safety of margin from 519. So all of this is a safety of margin that helps you to protect you. So now you are not gambling. Now you are doing trades with 66 to 95% chance of success because you are overlaying the price action of support and resistance. Plus, you can look at your option statistics, but you cannot go just with the option statistics. I go first and foremost with those trades set up, and I can see, because when I look at PCLN, I can see that it retest, and it goes and retests the weeklies or the monthly DTZs. Like here, if I put a weekly, and I look at the PCLN, I know before it happened now that ultimately the 1130 area, 1130, 1133 is a target for PCLN, and then I know also the resistance at 1259 here is very strong now on PCLN. So I know it by looking at which zone out of those 27 zones is already a resistance. Pink segments right there are resistance at 1250, 1260, and support at 1130 on the weekly. And then you can tie it up with a daily or whatever. But the key is to know the directions between the support and resistance with the right trade setup. Now also you want to overlay like Peter and Ron show you the right option strategies, because look now, if you look here, this is an option chain on PCLN. Look, I was a seller of that credit spread with the time decay working on my favor, giving me a daily paycheck or weekly paycheck and a monthly paycheck here of 20% return on my money. Okay, by investing $1,500 and making $300 in a week by knowing those support and resistance. But the one standard deviation, two standard deviation would have never helped you to do those trades. And now look, when you look at an option chain, it's very telling. You look at the open interest. If you are in an option like PCLN that has very small open interest, 46 contracts, 54 contracts, instead of having thousands of contracts like the SPY, where the bid and ask is very small, look at the bid and ask here for soccer. The bid is 27.40, the ask is 30. And it's very dangerous because now, if you are the guy buying at 30, okay, and you need to get out and sell right away on the bid at 27.40. Now you're the sucker who lost $200.60 on just an in and out trade just from the bid and ask spread. $2.60 on a $30 purchase is almost 9%. You are giving 9% of your capital right away just being a directional buyer. So if you are the sucker buying that thing and selling it, so the market maker or the professionals or the good traders sell that to you at 30 and they buy them back to you from you at 27.40. Who is really making money here? The buyer or the seller of the option, everyone? Correct? Constantine? Sellers, sellers, sellers. Of course, everyone. The sellers is the winner here, especially on those big bid-ask spread that are wide, like the Googles, the Apples, and the PCLN or the CMGs and all the crazy ones. But see, that's why I'm a seller of options here, looking at the day trading zones and having a high probability of success. But look, what I do during the week is I substitute the yes and I trade the SPY options. I trade futures intranight as an edge to protect my portfolios, but look how cool and profound this is here. So let me show you the difference between the ES and the SPY, and I think you'll find it very, very profound for people who trade the ES, who are just futures right now. Which how many of you just trade the ES? I'm just curious. You are going to learn. It's going to be really interesting. So look. What we do in the morning with those auto plotting tools, this is the trade navigator. And the reason I have one screen, I have 6 screens. So I dedicate one screen every day to quickly see the cross retest or the trade setup so that I can focus on one or 2 instruments for the day, because you cannot trade everything. And what I do is I look for space. See on the years like this, 1866, 1852, 44, 42, I look for space. When I see that there's an instrument that has a lot of space, I zoom on 1 or 2 for the day, and those are the ones that I'm going to trade. So let me show you what I do. So most of my accounts, I trade time decay. It's no secret, like we've seen with Ron and Peter, that strategy at 68 to 95% chance of success are going to be the place where I showed you that seller of options, that's where the money is being made. That's where the professionals are. But what I do to boost my returns is, let's say you have a $30,000 account, okay? I would take 5% of this account, maximum 10%. So I would take what, like $1,500 to $3,000. And what I do is I trade mainly the SPY options to boost my returns, because sometimes on those you can do 50% to 400% return on your money. You know, I mean 400%. I did 4 times the money last week. We have 55,000 people on our database on Google. With real money, again, a lot of the stuff that we do when you go on our website and to get our PDF on master probability trading and real trading money series. You see my account. I do stuff with accounts. So this is the stuff that we do. Really is more about, look, you put your mouth where and your money where your mouth is, because you know what? There's a lot of good stuff out there, but a lot of people talk to you about concept and they don't show you money. They don't show you that they trade real money. And to me, look, I trade every day. And I'm like, hey, if you trade real money and you believe in what you're doing, you might as well show a real money and explain example for educational purposes with real money and real accounts. So here's what happened is that I take 3 to 5% of my money to trade directionals to boost my returns of those credit spreads. So if the total credit spread, I do 10 spread and I do 8 to 9 right, and there's 1 or 2 losers. If you size them properly, number one, and you understand what you have to look at on the credit spread and the naked put and how to structure the size, the stop loss, if you even put a stop loss, where are the support, the resistance, the shift of momentum that we just showed, you should easily make, like we showed you, 8%, 10%. I mean, Peter talked about 20% a month. Well, 20% a month, I don't know, but like on this trade right there on PCLN, I did make 20%, but it doesn't mean that all trades are 20%. So you'll have, let's say 7 or 8% trades that are going, credit spread, let's say, that are going to go to fruition, and 1 or 2 that you need to understand how to defend and how to tweak and how to look at your support and resistance properly to understand if you misinterpreted the support and resistance to start with. But to push those results, I like to trade the SPY. So why the SPY? Look here again, let's go back to the spread. See here, 27, 40, 30, 9% spread. Now let's go to the SPY, and why do I like to do directionals? And now you have to understand something. This is where the day trading zones are going to be extremely important for you also on the directionals. Plus, we show you on the credit spread for choosing your strikes, your high strikes and your low strikes. But here it is. Look at the open interest now on the SPY. 2,600 contract, 8,100 contract. That is 14,000 contract. This is so much more contract traded on the SPY. Now look at the bid and ask spread, how tight it is. 112, 111 to 113. That's a 2-cent spread. This is why I like to trade those directionals. Write that down. 1 ES contract, you got to know that, which most people use $10,000 in margin requirement. Even if you use $5,000 in margin requirement, which you should not do, most people that are smart use $10,000 a contract, and the reason being is most people use a stop loss of $100, 2 points on the ES. If you want to risk no more than 1% of your account on each trade, a percent of $10,000 is $100. Now, if you use $5,000 to trade 1 ES, $100 is going to be 2%. So the less capital you use per contract, the more you are going to be crucified. Some of you might say, oh, but I have some broker who gives me a $500 margin requirement to trade on ES. Well, if you use $100 on a $500 trade, you just lost 25% of your money. Yeah, you just lose 20-25% of your money. So you do 5 or 4 trade like this and you're out of the game. So you don't want to do that. So here's the thing that you need to do. 1 ES equal 5 SPY at the money options. Look at the price here, 185.85. The right at the money calls are 111, 113, or 152, 159. So your margin requirement here on the worst case is about $750, 780 bucks. So 780 bucks, 156 times 500 shares, 5 contract, gives you the same leverage than if you were trading 1 ES. So here you use 10,000 or 5,000 versus 780. So it's 10 times to 20 times less money. Now, look at the risk, $100 here, same here. You use a 20-cent stop loss on your directional SPY. And so you have the same risk, 15 times less capital. But now, what is the return on investment? Well, let's look at the charts for the past 48 hours, and this can change your life. Let's go back to the day trading zones, and it's again, where is that going? Well, if you look at the day trading zone since Wednesday, You had a look for the past 2 weeks, cross retest, boom, from extreme buy zone to sell zone. That helps you double or triple on those SPY. Retest that fell, and look out since Wednesday. So they went and retested a cluster high, cluster low there. See, net buyer, net seller, net buyer, net seller, net buyer, net seller. See, this was a net seller here, net buyer here, net sellers here, net sellers here, net sellers here, net seller here, with a cross recross of the day trading zones 1866 ES. We've called this 1866 ES a lot on the members area. See, you can see it right there. See those are the 26. We just talked about the 26, and look what I wrote. 1866 super key. So that's what's cool with the DTZ analysis research that you get every morning with those 9 auto plotting tools on those markets, and that we have available for eSignal, Ninja, and TradeStation. All our Thinkorswim users, they just use that table and they plug their lines themselves. But what you can do is you can get Ninja for free. Okay, and plug with TD American Trade Data or Interactive Broker Data, and you get everything for free, because Ninja can be downloaded for free. Just tell them that you came from us. And what happened is, look here. So I put a commentary every morning on what I look on those 9 markets, and also we do a weekly video. And again, this I spend an hour to 2 hours doing from those tools, from the full Pro Tool. Everything comes from the full Pro Tool. So we interpret the MACDs for you. We do all the hard work of those 27 zones and 7 zones, the up arrow, the blue dot, the blue segments, the resistance and the supports and the trend. And the idea is you don't want to trade into caution zones, because this is where you are going to be chopped. You want to wait for the extremes to have high probability trade. And you have the commentary. So on Wednesday, we said 66 was the most important number to look on the ES. So what I do is I look at the ES pattern, and we have also a mastermind group on for the mastery trader. You see this our guys here, and they share. Good morning, they share stuff. Okay, so what happened is, you go back and you look at the 66 on Wednesday, and that was that was this level right there. You look at that 66. So it went from the bottom of the buy zone all the way to the bottom of the caution zone for 24 points. Okay, in 24 hours. So 24 points. Let's say you are a great ES trader. You got it from the top to bottom, which is most unlikely. Is $1,200 a contract. $1,200. $1,200 profit here, divided by your capital requirements of $10,000 per contract to trade an ES, is only 12% return. And let's say you use $5,000 per contract to trade 1 ES, that would have been a 24% return. Now look, I trade the ES, the SPY, looking at the ES. Okay, and I use the futures to hedge myself intranight in case I'm in a bad overnight. So look what happened on the 26th. We went from this retest at 188.15 area all the way, let's say, to 185. So 3 points. So 3 points move, 3-point move on the SPY, right? With a 50% delta is about a 1.5 move on your option. If you buy the option about $1.50 is a double. But look, you'll see it on the charts. You know, seeing is believing. Look what happened. You look at the 188 of that day. So you look at the 188. So do 10 strike. We look at about the 188, okay, or the 187 or the 186. But look at the 186. Even out of the money, you do a chart, toss chart. You look for the past 3-4 days. Or look here. Trade day, 3 days, 5 minutes, and you look from this Wednesday, the 26th, right there. So this was Friday, this was Thursday, this was Friday. Look where the option was. $1. The $1 went to $2.71. This is over doubling your money. This is 171% return versus a 12% to a 24% return on the ES. So this is key. This can change your life and see the things differently. Here we use $780 for 5 contracts. We accomplished the same power with 1 ES, right? Okay, 171% return, 12% or 24% return, depending on how much capital you lose. The risk here was 100 bucks, 20 cents stop loss, and here the risk was 100. Same risk, and look how much more, 5 to 7 to 8 times more return on your money. So 5 to 10 times less capital and margin requirements to do those trades. So on Tuesday, I'll do a live event and I will show you on Tuesday how you can segregate and have an account to sell your credit spread. If you have small accounts and if you are someone that has less than $30,000, $25,000, which is the pattern day trading rules, I'll show you on Tuesday how you can create an account here for trading the SPY and one account to trade credit spread and out of the money with most of your money, even if you have a small account of $10,000 or less or $15,000, and how to avoid the pattern day trading. We'll do a live event for people who attended the event today. What all you have to do is you have to go at day trading zones. Kevin is sending me an email that we have to wrap it up. But all you have to do is you go at realtraderswebinar.com/DTZ free. So I can repeat again, realtraderswebinar.com/DTZ free. You click there and you'll have access to a free PDF and 4 training video series with real money. They were done with real accounts and real money that re-emphasize some of the concepts that I showed you today. And you will get also an invite to the event on Tuesday, and you'll get something that is very rare. We don't do it if you go on our website, daytradingzones.com. Our DTZ analysis starts at $97 a month. It's not the master, but this one, $97 a month. We are giving today for everybody that attends the event, if you want to, as you sign for your free PDF and real trading money videos, you'll get a $7 trial. $7 trial, not 97, $7 trial for 14 days. So for 14 days, you can try what we do. Come on our live event on Tuesday. I mean, obviously, I wish I could go further and share a lot of stuff, but a lot of the stuff that I share with you already could help you with the trade setup, dividing the range by third, understanding that the 1 standard, 2 standard, 3 standard deviations are not working all the time. So again, go there, realtraderswebinar.com/DTZ free, and you'll get access to your PDF and your free money videos, and you'll be asked if you want to take 14 days for only $7, which is less than a round trip commissions on your futures, and potentially can really help you and change your trading career. Thank you very much for inviting me again on the Real Traders webinar. I'm an active contributor with them. It's an awesome morning of good content, and I love when people really try to understand options and futures combined together and how you make them work in synergy to each other. So hopefully everything was helpful, and if I was able to help you and think about your trading differently coming into Monday, then I've done my part. You take care, everybody. You have a great weekend. Thank you. Thank you again. Thank you. Yes, absolutely, John, Tom, Eric, and Chris. I'll take a lot of Q&As on Tuesday. I'm sorry, like Kevin is telling me to wrap it up right now. Okay, we went through a lot of stuff. So Tuesday we'll take more Q&A. I'll go through some charts and stuff that help you re-emphasize some of the concept we went to. You take care, everyone. You have a nice weekend. Thanks for coming, and looking forward to seeing you at the live webinar on Tuesday.